Producer AB, roll the intro.
3, 2, 1.
Here we go!
Welcome into the open where we get technical. You should have investments in long-term growth.
Good morning, everyone. Happy Thursday. I'm Neil Hamilton, and this is Get Technical. On today's episode, I want to address one thing first. Is Intel stock a buy in 2021? Meaning, is this a buy and hold for the intermediate term at least? And when I say intermediate term, I mean like the next 9 months or however many months we have left in the year. I think it's about 9. So guys, I want to know from chat. Go ahead and let me know. In the battle between NVIDIA, well, actually, no, we're not doing the NVIDIA thing. That's a false dichotomy, regardless of recent news, and I'll get into that. Let me know in chat, AMD or Intel as a hold until the end of the year. Which one would you take? If you had to. If you had to, guys, let me know. And producer AB... Looks like some people didn't. Whoa. Let the comments come in. Holy smokes. Okay, so we got David with Intel. Let me know why. I've got my answer. I have a short-term answer and I have a long-term answer. And for the purposes of the beginning of this episode, I want to address this as an intermediate hold. But David, I would love to know why. And this is a safe space for fundamental reasons because I will be talking about those. And Happy Muhammad, the peacemaker as always. I have to agree with that. So I have to agree with that. Okay, Intel better PE. Okay. NVIDIA is overpriced, but that's the false dichotomy. I want to know AMD versus Intel. This is pure CPUs. I'm not talking about the CPUs themselves. I'm not talking about the server processing. Producer AB, I decide when the charts come on. I decide. Hey, thanks. Pretty similar to me. Okay, long both. Okay, so we're getting a lot of people that are saying both. I think it's predominant AMD for the people that are really choosing. But actually, it's pretty evenly split. And here's what I want to say about Intel and AMD. One thing that you need to know, if you don't already know, is that these two stocks are what we would call pairs. When one goes up, the other tends to go down. It's crazy. You can almost use Intel as a technical indicator or an inverse indicator for AMD and vice versa. It's pretty darn reliable. I can't think of a more reliable pair. But here's how I'm going to look at it. Let me open up the chart here. Let's go full. Whoops. So this is Intel. I've drawn a line at the bottom. We're looking at the daily for Intel. Intel is looking pretty darn sweet recently. You can see that we've gotten out of this little. Let me draw this up. This is going all the way back to March of 2020. You can see that we've touched this support twice and then have established what looks like a firm upward trend. Sorry. It's toward the end of the week, whatever. So we've got our firm upward trend following this double bottom. And the way that I'm really going to look at what would have been a good entry based just on that analysis is by drawing this sloping line from the pivot. That sloping line from the pivot says a good entry would have been here, and look at that gap up that you would have gotten. So in a very short term, Intel was sweet. Yeah, give me like the video if you like the hidden meaning in the paintings that I use here. I'm an auteur style chartist. So yeah, we've got this double bounce. So honestly, from a technical analysis, from a swing trade analysis, Intel looking good. All right, let's automatically draw a little channel that is trading in using a basic linear regression tool. And you can see that we're trading within a channel. We're bouncing up and down around this mean, which is an average. Let's get rid of that, and let's use our Bollinger Band for a more organic look. This uses the 20-day moving average with an upper and lower standard deviation. And you can see that we're actually doing a pretty good job, which is extra bullish, of bouncing off the mean instead of crossing down to the low. However, it does look like this one wants to cross down. This candle looks like it wants to cross down. In the pre, we're low. We're in the pre-market still as I'm recording this, and we're low. So it looks like we do want to touch the lower end of this Bollinger Band, which could spell a reversal. And something I want to point out, let's just look at this candle, guys. That's a big bullish or bearish engulfing candle. So you should know right away that you're looking at a couple red candles to follow, seeing this big red candle following this green one. Now let's look at the weekly. Same business on the weekly. So some of those things that I pointed out for a short-term trade on Intel start to get wiped away when we look at just at the candles. This is the weekly. We've got a bearish engulfing. I expect us to go down to lower levels, probably around 58, 59. So short-term trade, I'm hands off on this. I think we're going to get rejected at this point right here, which is I'm going to use a little boxy to show that it's got a little bit of range, because this is a multi-year line of resistance. And it looks like we're about to get rejected there. So we've had a nice run with Intel, not looking good. Now for the long term, Intel has had one of their bread and butter sources of income attacked. One of their moats around their business has been attacked by NVIDIA. NVIDIA is a great player with graphics cards. Absolutely necessary for anything if you believe in this whole NFT thing. Absolutely necessary for any type of 3D modeling, gaming, the gaming industry, which is massive and will just continue growing. Graphics cards are needed for architecture. They're needed for any type of contracting where you're drawing schematics ahead of time. They're needed for artists. They're needed for gaming. They're needed for
3, 2, 1, 0.
And the market is open.
3.
And the market is open. So I'm short on Intel on the short term. Now I want to compare this to AMD really quick. Let's just look at AMD, which I've got open down here with a couple indicators. AMD, as I said, a pair with Intel, doing the opposite, right? We've got an upward U shape here with Intel. AMD, we've just got it sloping down. Where's my tool? There we are. Paintbrush. So we had this nice upward trend with Intel. AMD, downward trend. And let me box this in to make it very clear. A little rejection. Oh, stupid paintbrush tool. A little bit of a rejection of our double bottom breakout, right? We had a failed breakout here. So this could be a triple bottom. Who knows? But what's happening here with AMD is we're following the sloping line of resistance that we need to break out of. However, I've got to say, if I bring up the Bollinger Band, where is it? Got too much going on my screen. If I bring up the Bollinger Band, I'm liking what I'm seeing. I'm seeing some respect of the median here, and as we're getting into the open, I'm seeing a bounce. So it looks like we are trying to ride this line of sloping resistance. Who knows? When we'll break out of that, but that would be a reverse of trend. Long term, based on Intel's moat being disrupted by NVIDIA, based on Intel's moat also, and Intel's got a strong brand. People that like prosumers, when they see the Intel name, they know they want that in their computer. They want to make an Intel PC for their organization, their company, or for their personal use. That's true. But AMD has been coming in and absolutely disrupting that paradigm. So we got, hold on, let's bring in the BZ cam while I'm talking. Absolutely disrupting that paradigm by coming out with high performance, lower costing chips. This guy's got one. I did my research on Intel versus AMD, and I've got a really nice AMD chip that I love. It's a Ryzen. I would love a Threadripper, but it's a Ryzen. So what I've got to say is on the short term, I want to see a break above the sloping line of resistance for AMD. And then for Intel, it looks like we got some work to do before we're going to break back out to Intel to all-time highs. I think it's AMD for 2021. I don't think it's Intel for 2021. If you had to choose, but you don't have to choose. That's the great thing. They're both great chips. Keep them on your watch list. One goes down, the other one tends to go up. You can trade them in between, or you can invest in them both over a longer time horizon, 3, 5, 10 years. All right, so we got that out of the way. Now let's start looking at AMD's result. Yeah, everyone's giving the shout. Everyone's giving the shout. Everyone say hi, Luke. Okay. So let's get this. This chart is super messy. I don't like it like this. I apologize for the mess. Let's take a look at your picks from Twitter. Everyone smash the like button so that we can get this video noticed and Benzinga can grow and we can continue sharing trade ideas with you. Getting this, that's weird. That's an NFT. Isn't that weird? All right, so let's look at, that's my stupid ass face. Olivia Vaz constantly sliding into my DMs. It's starting to get weird. Let's see. I got to get to my, let's go to my profile. God, guys, if you guys could tell the women of FinTwit to just stop bothering me when I'm trying to work with their DMs, that would be great. It's really starting to get annoying. Sylvia Bellrock. Oh, God. Oh, here's a picture of me recently. Where is it? There's that thing. Here we go. Big shout out, Mikey Mike, as always, Captain Cappy, Mike Danella, who's a UFC fighter. Definitely check out his stuff. We've got some great picks today. As always, it's first come, first serve. Let's erase all this stupid crap that I draw on these and look just at price, just at volume. All right, so let's look at the oldest ones on here. Now they all look like 1 hour, so I've got to start off with AA. What is this? Non-energy. Oh, aluminum. Yeah, Mikey Mike is like, so this stock has earnings today, and your boy is like thinking about it as a hold into summer. You rocking with aluminum, so somewhat of a cult-like mentality around his metal types, around his periodic table. Loving that. So let's take a look at this. This is a rounding bottom, which we love on the show. This is the type of guys we are. Guys and gals. We love these rounding bottoms. Beautiful. Look at that. Adorable rounding bottom. All right. Now let's do a little Fibonacci here. I'm going to anchor my 100 at the top of the pivot point when this downtrend started. And then I'm going to anchor my low point at the absolute low, which is very easy to find on this, of our rounding bottom. Now, this is telling us key levels to watch. So as this stock grows, which we believe it will, because we have a rounding bottom reversal pattern, which means a reestablishment of a bullish trend, which it looks like it has been doing some cycling between. These are the levels where we would expect some consolidation or speed bumps in our growth going up. So something interesting I'm going to point out here, Mikey Mike, is that it looks like it's been trying. It's been trying. So we might get a little bit caught up and then get some more of this this sort of ongoing wave pattern that we have of rounding bottom, rounding bottom, rounding bottom. Very possible that that's the case, and that there might be something if we look. I'm looking at the weeklies. Ooh, it's even rounder now. Nonetheless, the pattern remains. And what I was saying remains. You can see that these are sort of key levels getting caught in between these Fibonacci levels. So I'm going to watch out for that. This stock looks like it likes to play that way. I'm going to go back to the weekly really quick so we can see more of the history. Yeah, and you can see the 161% is right about at what looks like the all-time high. So these are good fib levels. This is a very good guide to use on this. Starting at the high in April 9th, going to the low around March 30th. So now let's look at this at the short term. We want to see this stock break above this 50% level and then start targeting the next level up. It looks like we're going to hit some congestion. So we're going to watch out for that. Around $38, $39, it looks like we're going to hit some congestion. So make sure you're watching if you're going long on this. What I'm thinking is for double A here, let's go back to the daily. Let's do a little short-term channel analysis. Let's just look at this as a price channel. All right. So within our rounding bottom, we've started an upward channel. Let's draw it out. I got too much stuff on here. Channel. This one. There we go. Boom. I'm going to start at this swing low and then go up to this swing low. An aggressive channel indeed. And let's go ahead and just go up here. Let's go up here. I'm going to get rid of the Fibonacci to clear this up, make it a little bit easier to look at. Let's just look at price. So from a channel perspective, you can see us bouncing between the median and the low. We've got a little bit of a cup action here, a little bit of a cup, which we'll look at in a second. And then I think we're going to want to return to the median. Now, if I bring back the fib, let's see if that helps lines up with our price target. Let's go ahead and anchor our Fibonacci retracement tool at the high back in late April to the low in March, whatever. The low of our rounding bottom. Yeah, and you can see that's right where we're getting stopped. So I think a break above this level, which where we're getting some resistance today, we got a red candle, but a break above this level, let's do the thing. We'll treat this like a left cup, a right pivot, and we'll say this is the early days of a potential cup with handle. Right? Getting rejected by that resistance line, and we're looking for a break out of this handle. Might take 2 or 3 days for this to kind of work itself out. Now, if we're measuring the price targets of this, we go to the neckline, which is the left cup and or the right pivot. And since they're both even, and that's an easy neckline to draw, then we go down to the low of our cup with handle. And we're going to add this to our neckline and look at that. Well, actually, that's adding it to the fib line, which lines up perfectly. But if you add that to our neckline, it's a little bit above the mid resistance, but adding that to this fib line hits the median like perfectly. Absolutely perfectly. Now let's see this level though. I want to see where this level lines up with that resistance. Let's zoom out. White line. Yes, just as I suspected. This is a line of previous resistance back in November 6th. This is a line of previous resistance back in July, Feb 2015. And then we've got some congestion and ultimately resistance at this level in Feb 17. So going way back. So what I think is we look at this as a short-term swing trade, but it's a substantial move if you're doing some options, definitely, depending on how you want to trade it. Cup with handle upon breakout above the Fibonacci retracement line, which is at 33.52. You can look for a confident profit potential of about 12.6%. That's a nice option. Yeah, it's great to hear. So Joe, thank you for pointing that out because I don't have that pulled up. But it looks like there is an active options market for the stock. That's wonderful. Let's just check in on X. X is down a little bit, but you know what? You take the stairs up, the elevator down. Keep watching this stock. That's what I got to say about that. We knew we were going to hit resistance around $23. All right, next stock. We got Vuzi with the VBP anchored at 12/2020, December 2020. This is coming from Captain Cappy. Dog with toupee. A rare that his avatar is based on this is true, based on a rare pattern. A rare pattern that if you smash the like button, I will discuss the rare dog with toupee breakout pattern with over 250% upside potential. So if you want to learn about the dog with toupee pattern, make sure you smash the like button and share the video. Share it. Start an email chain with your grandma. You know she'll send it out. Yeah, tell your grandma that if she shares this video to all of her friends in her church group, that Biden will be able to defeat communist China. Just an idea. Okay, guys, appreciate the support. Let's get into Vuzi. V-U-Z-I. Woo! Damn! Damn, dog with the toupee. The stock is wild and out. What percentage change is this? All right, so I am on daily. So this is from December 11th to April 9th. The stock went up 706%. It was a penny stock. Now it's not. Woo, sheesh. Sheesh. And I know y'all been watching Vuzi because I see you guys talking about it all the time. Love it. What the hell do these guys do? Whatever, I don't care. All right, so this is Vuzi.
They make wearable technology, like glasses.
Said I don't care. All right, so let's keep going on this. Yes, I know it's augmented reality thing. So let's keep going on this, looking at this from a linear regression. Producer AB. Everyone smash that like button for our sweet summer child, Producer AB. Honestly, such a good guy, and a pioneer of the V for Vendetta pop, which we see right here. We do have a solid V for Vendetta pop, which was discovered following a deep Donkey Kong analysis here on Vuzi. So that is a very bullish indicator. Okay, so let's do it the way that Captain Cappy wants us to do it. VZ Daily with VBP, which stands for Volume-Based Profile, which is a better name for volume profile. So VBP anchor to December 2020. Let's do it. And the man wants me to anchor the VBP, and you guys know that I don't have my VBP sent to anchor, so you're going to watch me learn how to use the tool. So let's learn together. Dog with a toupee, guys. I mean, this thing just looks like I don't have to use the volume profile to know that this thing looks like it's going to bounce and ziggy zag up real nice. But at any rate, I shall do it. This is the weekly. Oof. Okay. So that looks like a little pairing for some downside, but look at how strong this thing has been. You know, this one looks like it kind of wants to reverse. No, not on the weekly. Okay. Well, let's pull up our volume profile that I can anchor. Fixed range. That work? Do I do it now? Anchored for 12/20, so December like this, like that. What did I do? What have you done to me, dog with toupee? Control Z. All right, anchoring here. Editors, cut that out. All right, so we're looking at a classic Donkey Kong dog with toupee pattern here on Vuzi, and we're going to pull out our fixed range volume profile tool, also known as volume based price. That's not what that stands for. What the hell does VBP stand for? VBP indicator. Volume by price. All right. Bear with me, guys. Does anyone know how to use the volume profile on TradingView? Does anyone know how to use it? Control Z. Here's what I'll do. Instead of using that anchored thing, I'll use the one I'm comfortable with, which is the visible range, and I'll just make only from December onward visible. And that doesn't do us any favors. It really doesn't do us any favors. All right, sorry, Miles. My technical skills are not good enough for you. This is really like bothering me though. I don't know why this isn't working. Let's figure out how to do this. Trading activity over a specified time. Yeah, I get it. Do you need to do it horizontally? Is it horizontal? Maybe that's it. And I was doing it vertically. That may very well be it. So let's get our indicators. Let's get our fixed range, and let's do it. Okay, fixed range, please. Fixed range. Double click. One more time, guys. Okay, it's broken. Thank you, Richard. Click the date and click the end candle. Others are saying it's not working for them either. Indicator, fixed range, VBP, volume-based price, volume by price. December to now. This is a powerful tool. Literally erases charts. Yeah, Joe, we're talking about doing that. Yes, I know you use another. Miles, I know. All right, whatever. We still got a nice dog with toupee. Let's just look at Vuzi daily. I don't know why I thought you said weekly. I'm not going to use the volume profile in this particular case. I'm just going to get rid of that. And I'm going to look at this because I see this channel, and I'm just going to use my Bollinger Bands to get going on it. We broke down past our 20-day moving average. Not great to see. But we can still go a little bit below it before we get a green candle. Let's take a look at what we're doing on the hourly. Remember, guys, if you're doing multi-time frame analysis, make sure your time frames are far apart. Multi-time frame analysis is not going from 1 hour to a half hour because the chart's not going to look any different. You're not going to get anything out of that. Multi-time frame analysis is like weekly to daily to 1 hour to 15 minute to 5 minute. Off my soapbox. Okay, so I would like to see we're looking at the 1 hour, would like to see a bounce off of the standard deviation for a return to mean. But Miles, let me tell you, man, if you've got a chart on this, tweet it at me and I'd love to share it because my volume profile tool is not working. I see a nice channel here and I'm going to go ahead and just draw it manually using the parallel channel tool. Someone's calling me from Ann Arbor, Michigan. Hippies. And then anchor it. My second anchor. First anchor on this swing low. Second anchor on this swing low that you should be able to see with my mouse. Brought up to the swing high in between those 2 points. And you can see that so far we're respecting this. We are respecting this line. RSI is in a nice range, right around 50 or 60. Is trending down a little bit, but the price has been going down as we return to our lower line on our channel. MACD flashed a sell signal at the appropriate time as we crossed our median on, if I can move this thing, on what date was that? On April 12th. And let's look at how we're doing for the sector. This stock is outperforming the S&P 500. All right. The average performance of the S&P 500 by percentage gain. So it's a great stock. It's performing well by all technical indicators that I have pulled up. I would expect to bounce on the lower channel with a target of a return to the mean. And then if we cross that mean, if we cross this healthily with a healthy green candle, close above the line, you can target the upper line. So there it is. Sorry, I couldn't get the VBP for you there. CHEK. Oh, Mike Danella said the magic words. We've got a rat snack. And it looks like Miles is going to tag me with the chart. Thank you, man. We do this together. We're a team. CHE. Okay. This is the weekly. Let me switch to the daily. Hoo-wee. Sheesh. All right. So let's draw some lines here, okay? Let's go to this high. Let's go to the next swing high. And look at that. So it's this high, swing high before the plunge here. And you can see that that's right where the breakout started. So do that on your charts, because that would have been sick. Mike, let me know if you did that. I mean, and this goes back. You can see that this sloping line of resistance is relevant throughout the price memory of this ticker, right? Price as memory. So we've broken out. We've got our beautiful broad base. Beautiful. Been sitting on a bench watching a concert for a long time. Booty. Got to wake up, stand up, and walk around, looking broad base. Now, let's get out our rounding bottom U thing. Let's go to the let's do this thing right. Let's do it right. We'll go to this high point and then bring it up to the other high point. Bring this down to the low of our pattern. I think this thing still has some room to do some stuff. It is really choppy. Why? Because this is the penniest of penny stocks. All right, penny stocks be that way. Nonetheless, let me draw our neckline here. Whoops, I got to switch to the pointer. Let me draw our neckline here. All right. A little bit low on that one. Let's bring it up to the resistance. There we go. There we go. And we can see that served as resistance. Once again, we broke out above it on some chaotic, probably FDA thing. CEO was speaking at a conference about how good his whatever is. And then we're in Chop City. Choppy chop. So this is our current line in the sand. All right. Looking at this on a much shorter time frame. Can we break out? Let's do the line thing again. I'm trying to draw it from this swing high, not even a swing high, this high wick to this little swing high. See, we got this little U, and then we got the swing high on April 5th. I'm trying to grace that line. Let's just tighten this up. Ooh. Maybe it's easier to do it like this. Oh, that's a tough cookie right there. That is a tough cookie, my friend. It's not perfect. It is not perfect. And you can see a bit of a descending triangle. This is one that I would look at on a shorter time frame. So as a swing trader, I don't see much with this until we break above the 50-day moving average, which you can see we struggled with for a while. That's this blue line. And then we broke down past it. This is just like Palantir, where something will probably happen in between. But as a swing trader, I don't really want to put a bunch of money into it until we're firmly above that 50-day moving average. Let's pull up the 20-day and the Bollinger Band. You can see that we're tightening up on volatility. Like the lines are getting closer together. So it looks like, we might need to tighten for a little bit. There might be some consolidation down here before we get a volatility expansion. Now, hopefully that's to the upside. We're holding the support. We've shown in the past that it is possible for this stock to break down past it. Deleting that stuff so we just get a really clear picture on this. A break out of the 50-day lines up pretty well with a break out of this sloping line of resistance. Looking at this on a much shorter time frame, let's go down to the hour. Actually, hell, let's go down 10 minute. All right, let's get jiggy with it. Nah. Let's get jiggy with it. Nah. All right, so we've got the 21 and the 8 EMA. My buddies. Going to hide the 50 MA. And you can see we got a sell signal on this lagging indicator April 14th at 11:30. Right now, we're still in sell city. If you want to look for an entry for a short-term trade, option scalp, you could totally be bullish on this on the short term. What I talked about earlier was swing. Right now, we're talking about day trade or scalping. Grab your handy dandy paintbrush. You just want to see this red line curl up. That's your 8 EMA, your 8 unit EMA. You want to see that curl up, and you want to see this blue line curl up like that. And that cross is your buy signal. It's lagging, yeah. But that's how I look at the chart. Okay, so let's get to shake my head on the daily. SMH. Oh, semiconductor. Let's go. Okay, so these are two semiconductor ETFs, right? SOXL. Isn't that semiconductors? Yeah. Oh, it's a triple leverage. Okay, I see you. So Miles once again. Actually, Miles, you know what? I gotta do this right. I gotta get to someone else's pick. All right. We semiconductors definitely look at it. That's why I was looking at Intel today. But let's look at XME, which I believe is metals. Let's take a look at our metals. Who baby? Let's delete my John Madden drawings. If you know, you know. Let's get this thing back to the daily because Joe wants to look at the daily. And remember, guys, Twitter at Neil's Tweets. Get your picks up here. Yeah, XME. I love it. I love this thing. We got our double bottom. Not only do we have a double bottom, but we've got some additional strength from the right pivot there. So looking snackalicious. Now let's look at our roadblocks that we have ahead of us. Anchoring our fib retracement at the high on March 16th, 2011, and then bringing that down to our absolute low, which is December 23rd, 2015. Multi-year double bottom. Bigger the base, the bigger the space. Loving it. Loving it. We're at a little consolidation phase, which I can probably find by anchoring my... I could probably get a line there if I anchored my fib retracement at one of these more recent times. But I'm looking at a big trade on this thing. A big trade. So right now, let's do the damn thing with the automated channel drawing tool, which is our linear regression, not a Keltner channel. Not that thing. Linear regression. There we go. We're in a nice channel here. We are in a nice channel. And then let's further draw that manually so we can get something a little more actionable. So let's start with our swing low here. Our swing low here up to let's go to the absolute high. And let's get rid of our automated linear regression line. Looking like, let's look at a couple other indicators too for XME. Number one, volume just a smidge above average yesterday. Great. That's why we saw steel blasting off. X. We had great volume on that. MACD. A mean looking claw upwards. Now we want to see it cross the slow line, which is orange right here. Okay. That's your MACD. Mean looking claw though. And we are outperforming the SPX or the S&P 500 here on our relative line, our relative strength line, not to be confused with your RSI. And we're in a good area with RSI. We're above 50 and we're heading upward toward our 70 line. So I think XME, if it holds this level, and even if it turns, I mean, especially if it turns green today, it's looking like a buy. Now let's look at the short-term pattern really quick before we bring our guest on. It is 10 a.m. Did you want me to? Okay, yeah, you want it on the daily. So we do have a lower high. Not great to see, but I understand it because we're hitting this median. So we might be in a smaller channel here, which can be drawn like this. All right, so I think we can still stay bullish on this one without fretting too much and say that we had to bounce off the median and we can target the upper side as long as we see some continued strength here. And we want to see that MACD keep curling up. Looking at this from a pattern perspective, we have our impulsive move, which I'll use the line tool to draw, down here on the low of our channel, up to the high. And then we have our corrective phase from the high down to the low here. So the corrective phase is like this. Red, red, red. Sure. Got it. Followed by a big old green candle, a big mean one. So we're going to take the measured move here, which is going to be this area of support that we found. The high, to this area of support. We're going to add that to our breakout level, and look at that. Look where that line goes. Smash the like button if you see where that line goes. Right to the upper line of our channel that we've drawn. It's a beautiful thing. So the pricing structure is here. Just watch it to make sure it's doing what you want it to do. The additional indicators are bullish. Yes, this is a lower high than we had back in March 12th, but we're trading in a tighter channel right now. So for a breakout from this descending triangle, we're targeting that upper line. Smash that like button if you like technical analysis, baby. All right, this ain't a joke. This ain't your daddy's technical analysis. All right, that is enough out of my silly ass. It is my great pleasure to bring on Robert Roy, not Michael Roy. Confusing him with someone else. The one and only Robert Roy to talk about his trading strategies and teach us a little something. So, producer AB, can you bring on Robert? Hey, Robert.
Hey, Neil. How you doing?
I'm doing well. How are you today?
I'm fantastic. What a great day, huh? More all-time highs. What else could you ask for?
I woke up feeling good, man.
Amen.
Happy as hell. So, I mean, we're in a great atmosphere for stock picking. We're in a great atmosphere for trading the ETFs, just the indexes, trading around them, and also for trading stocks that have sector strength behind them. So I'm curious, how do you look at what's going on in the market? How do you find the stocks that you want to trade, and how do you trade them?
So pretty straightforward. For the most part, Neil, I've got 20 candidates that we trade all the time. I analyze those 20 stocks every single day, and we give them different rankings on their bias, whether it's bullish, bearish, neutral are the three primaries, but then there's a bullish neutral and a bearish neutral as well. And it all comes down to the relationship of where the stock is in relationship, where price is in relationship to the various moving average settings that we've got on the chart. Okay. So as an example, if I flip over here, look at Chipotle Mexican Grill. Right? Actually, this is S&P. Let's go to Chipotle. All right. I've got 4 moving averages on here. Let's really only focus on not the blue one. That's for one very specific exit only. We use that, and that's a 5 moving average. But the pink is our 8. The green is our 21, and the brown or reddish, whatever color you want to call it, is the 55.
Okay, so 8, 21, 55. What increments are we looking at? Because your text is really small. It's hard to tell.
So this is a daily chart we're on right now.
Perfect.
So
Thanks.
all my analysis starts on an offline charting system. We've got a delay on this for data, but I don't use it for the intraday. I use it more of what's going on for the end of day. Sit down at night and make the decisions of what I'm looking at tomorrow, and then transfer lines over to TradeStation. There's a crisp charting engine here with scanning capabilities that I just can't get on TradeStation. So this works out extremely well. All of the levels that I use, 5 is the other one. That's the blue line. All of them are exponential moving averages, and they are all Fibonacci levels. I heard you talk about Fibs earlier in your show. I'm a tremendous Fibonacci trader. Huge, huge fan of them. Right? We look for confluences, Neil. That's the biggest thing. I don't want to trade a candidate if I don't have a confluence. And when I say that, let me be cautious. If I'm taking a swing trade, which is my preference to swing trade, but if I'm taking a swing trade, I'm not taking it without a confluence, meaning I've got a moving average intersecting with a Fibonacci level, and we get what is called a clear and concise entry. Clear means I have no resistance between the potential entry and my next target. In other words, there's not another moving average in there. There's not an all-time high in there or something like that. And concise, meaning I'm waiting for that trade to be right at a fib level and a bounce off of there to take the trade. And the reason for that is it minimizes my risk in the trade. You know, we take, in one of my programs, we take about 250 to 300 trades a year. And last year we were at 80% win rate. This year we're at about 73, 74%, something like that. And that's because we take it only at the right spot. If it doesn't align itself, I'll pass on the trade. And yes, we miss them. I can't tell you how many times Amazon has moved 200, 300, 400 points and we were not in that trade because we were waiting for the right entry. but we don't get hit very often on our trades. It's actually rare that we do. There were only 2 trades last year that I would consider bigger dollar hits, but most of the trades, if they do go against us, are very small. We had 2 trades the other day, and one went against us 380, the other one against us 750 or something like that. Very small dollar amounts, usually within a few $1,000s. But all of these to focus on setting up options trades, Neil, is what we're looking for. But Fibonacci is the key to what we do.
I love it, man. I love it. Big respect for Fibonacci. So many people discount this type of stuff as like magic or woo-woo nonsense. Like, it fucking works. So if it works, I don't give a damn.
It's crazy. It's crazy. People tell me, well, you just throw enough lines on the chart and sooner or later it's going to hit it. We got talking about, Neil, I heard you mention the 50 percentile before on whatever chart it was. Sorry, I don't remember which one you were looking at. Let me actually take this off of moving averages, a little bit easier to see. And you were talking about it pulled down, looking for the 50%, and then that move up to that next line, which is the 618. And at this point, what I do is what I'm looking at here is I'm looking at an H pattern, right? So you got this move down, the reversal back up to the 618, and we're looking for a 2 standard deviation move, which is 2 lines, 1, 2. 96% of all data points fall within 2 standard deviations, and you will find most, not here, of course, but most candidates, most trades will bottom out about 2.5 lines before they reverse and head back up again off of that 618. And I was teaching this with another coach who was one of those that called it foo-foo, right? Yeah, it's fun. Yeah. And when I talked about this, he goes, Rob, I've heard something similar to this when I first started trading. My coach told me once it gets to the 50 percentile, it's going to go a little bit further and then roll over. And I said, oh, you mean the 618? And it was like a light bulb went on. He goes, oh my God, Fibonacci's really do work. And they are just a fantastic trading tool. I could not be happier with them. It's everything I do is based on fibs.
I love the simplicity of that. And these tools are easily accessible for everyone watching. I think most of the people here already know because they're all smarter than me. But for those of you that don't know, pretty much any charting tool you use is going to have a Fibonacci retracement, a Fibonacci extension, Fibonacci fans. Like it's going to have things that you can use in trading. But it looks like here, this is predominantly Fibonacci retracements, right?
That's all it is. It is just standard fib retracement levels. There's nothing special outside of, Neil, is I'm a very big fan of back testing. And I'll give you a reason or an understanding what I mean. When I chose my moving average settings, I back tested 4.5 million days of moving average crosses to determine the best moving averages to use. 8 and 21 are the ones that we came up with for the best settings for them. Now, if you're using a 10 and 20, is there that much of a difference? No, but I'm very much that perfectionist. It is a harmonic indicator. It's human nature. Things happen at those levels, and you don't even know that it's happening if you're not involved with Fibonacci. So I want the exact levels in there. So as an example, CMG, the reason I've got this one up for us, Neil, is this needs to be redrawn. We've violated the 764, which is a different number than a standard number, the 782. The 764 gives me actually a confluence of the 236. They're not a confluence, inverse relationship to it. It's a similar distance or exact distance between there. And I have found for me, from my style of trading, particularly one trade that I take, that 764 becomes very powerful. But once we closed above the 882, we needed to redraw the fibs. And it just happened over the last couple of days. So what I want to do is I'm going to back up this previous Fibonacci. And you will notice that I don't ever take my fibs off of the charts. Because there will be times that you may have to go back and utilize previous levels in order to find a target if it makes a whipsaw and flips the other direction. So if I take the Fibonacci support and resistance tool, I'm going to come down here to this V bottom that came down here. We had a nice move up and a reversal. So we're going down to the wick, the lowest low, and we're coming up to the highest high. And you'll watch the tool, even on this charting program, snaps to the wick.
Oh, that's nice.
Yeah, it's beautiful. Trade Station drives me nuts. I never get it right. I've got to go and modify it all the time. Again, that perfectionist, right? So that's the first step, Neil, is we draw the fibs. The second step is to make sure that there's not too big of a distance between these fib lines. And what that's called is, if there is, we need to insert what's called a fibot, F-I-B-O-T, which is a Fibonacci pivot. something that I developed about 15 years ago because I noticed that, remember I said the stock moves 2.5 lines, that right about in the middle, the stock was failing and turning back over. Why? If I look, I've got a little indicator. I know it's a little small for you to see, but I've got a little tool over here that tells me, well, actually, let's do this on the bottom instead. Wilder's average true range is what I'm working off of. So if we double Wilder's average true range, and it's a setting of 13, that gives me about 80. So if the distance between any two fib lines is less than 80, we need to, more than 80, we need to split it in half. Less than 80, we're okay. So 1537, 1580, so call it 1540 to 1580. So we have roughly $40 in here. That level is fine. I don't need to split that level in half. But if it is bigger than that, we actually need to split that level. And here's the reason for it. Because of the confluence that we look for, every time we enter a trade on a swing trade, we are expecting within 2 to 3 days to hit our first target. We get past 3 or 4 days and we haven't hit a target, I start to get a little bit nervous on that trade, whether it's going to complete or not in my favor. We're not exiting it if it doesn't, but because we could be wrong on timing, the market could just be in a resting period, or just a little bit of a reversal, a pullback, news from the government. Heavens knows that there's been at least one time in history the government has done something to mess up a move in the market with what they talk about. Yeah, exactly, right? So we're looking for that move over a 2 to 3 day period. Well, that Wilder's average true range says on average, Chipotle Mexican Grill moves $38 a day. Well, that means if it moved 2 full days, we could move as much as about $80. Well, if I only have $40 in here, I can make that target within the 2 to 3 day time period and take my first exit on the trade, right? If we don't have the room in there, meaning if it's a bigger number, let's take a look at an Amazon. So Amazon, as an example, these two fib lines, Fibbits are in black. These two fib lines are $168 apart. Well, if we're at, just call it 70, round numbers, if the Wilder's average true range is 70, that means 140. Well, this distance is greater than 140, so I need to split that level in half. The key here, if you go back and look, you will find over and over and over again where the stock fails at that level. Retracing, blowing back again, but here we went up a little bit above and we failed. So if we had entered a trade here, just as an example, let me try to do this. Stretch out a little bit and let's try to zoom it in so you can get a little bigger picture there. So if we took a trade from here and our target was this level here, well, that's awesome. But it ran up, and look at the pullback, the failure. On this trade, I would have exited half the trade at my Fibit. I would have been stopped out of the second half of the trade right about here, about 25% off of that fib line. I would have been stopped out of the second half of the trade. Life is good, right? Fat, dumb, and happy. I'm excited that we were able to get that move from 31.75 up to 32.60. So almost a 100-point move on there. And then we still picked up a little bit, another 20, 30 points on the second half of the trade. I'm fine with that, right? We got stopped out. But if we're targeting all the way up here, we're not going to get it. Now, does it happen occasionally? Yes. Look at this. We blew right through and then gapped up. I'm not talking about the occasional. I want to get on base a lot. I don't want to be the home run hitter. I want to be the batter that bats 340, 350, right? That gets on base over and over and over again, lots and lots and lots of times, because I have a better chance of being right instead of swinging for the fence and missing and having my head handed to me with $10,000, $20,000, $50,000 losses. I don't know if any of you have ever lost $50,000 in a trade. I have. It's not fun. Actually, I didn't even believe it happened. So I tested it again and it happened twice, right? True story. And someone had told me, Rob, you don't really know how to trade if you haven't lost 50 grand. I said, good, I've done it double, so I should be okay.
You really know how to trade.
Yeah. I do now. So, I mean, in essence, we look at this from an end of day standpoint, and then we take everything back to the intraday charts. On the upper left, I've got a 1 minute, Upper center, I've got a 5. The upper right has some Bollinger Bands on it, but that is only for one very specific trade on a Friday after 2 o'clock. Bottom left is an S&P, a 30-minute chart on the S&P, and then the center bottom is a daily chart. Right? And I use the 5 to trade off of, so I make the trading decisions today off of that specific chart. We use the end of day chart to say this is our candidate today. We wait for pullbacks and bounces off of the key levels to take our entries.
Man, okay, so I'm absolutely enthralled and enraptured by this stuff because I understand what you're saying, and I'm learning from it. One thing I really like that you said that's new for me is just tapering back the fib extension or the fib retracement and leaving it on the damn chart so that you can go back and see those easy markers for your levels instead of starting everything over again, which is what I do all the time. So that's very, very cool. Also, those moving averages, 8, 21, 55, those are harmonic, right? Those are line up with Fibonacci.
They are fib levels, correct. They're part of the Fibonacci number series.
Okay, so we've got, this is just Fibonacci through and through, and it works for the man. The man is so casually here making money, so casual about losing $50,000 twice in a row. He's got Comic Sans as his text on his chart. The man uses Comic Sans. All right, smash the like for Comic Sans, everyone's favorite font. I'm loving it so far. Do you have anything else to teach us today?
I can share 2 open positions. Well, how about we'll do 1. How about that? Booking is an open position right now. All right, let me go to a different template. And let me zoom in as much as I can. Good. So actually, I'll bring it out so you can see the fibs. This is the overall fib move that we've got in there. And confluence, 8 moving average, 236 fib level, which is a hesitation level, 236. We closed above. The next day, we retested that 236 and bounced. That was our entry. Our very first target, we missed it on this day. We were too tight on our target, so we missed the first exit here, but we wound up getting it here on the 9th. And that trade, I don't know if you guys can see this or not, but that trade right now is up 20. Now, these are all practice, right? I'm not showing you my funded account. This trade is up $21,000 right now, and every one of these trades are called out live in one of our trading rooms. I actually send things like this out, Neil, 2 to 3 times a week to our students for free. Just a newsletter saying, "Hey guys, check this chart out." And here's what we're doing. It's a video. It's 3 or 4 minutes, 5 minutes long. And it just goes over, here's a potential trade setup for tomorrow. And I only do it on days when it really aligns itself well. But we're looking at 21 grand on 4 contracts on Booking. Now, don't get me wrong. It's about $120 a share on Booking. But what if you did Adobe at $16 a share? So you spent 5 grand and we're already up almost 2.
Beautiful.
48, 42%, whatever the numbers are. I'm not the math guru. Thank goodness you don't have to be good at math to trade the market.
True. All right, man. That's about all we have time for. This is Robert Roy, guys. I'm loving it. Where can I go to follow you and continue learning from how you do this?
Absolutely. 2 places, Neil. First, go to tradewithrob.com. Guys, that's where you can subscribe. It's free. I send out, you got to see the Baidu trade we did the other day. We crushed it on Baidu. But I send out the videos a couple times a week, tradewithrob.com. And then, Neil, every Friday at 2 p.m. on Benzinga, we do an Options Explained with Wealth Builders HQ show for an hour.
I'm going to start tuning in. I'm going to stop. I'm going to tell my boss, I got to watch this. All right. I'll give you those CPS reports tomorrow. So that's great. I would love to have you on the show again, man. You've been a great guest, very informational. I think this gels exactly with what I'm trying to do. So I think folks definitely are resonating with this, man. Thank you, Robert. Have a great day.
You're welcome. You too, man. Take care. Thanks, Neil.
See ya. Robert Roy. That's a real one, guys. Very, very, very sure about the Fibonacci levels, and I love it. I absolutely love it. Guys, make sure you check out that contest. I put a contest in chat. Click the link, although that's a weird... Wait, no, don't click that. Don't click that. Click this one. click this link. Ignore the link above. Click this one that I'm putting in chat right now to enter the contest. If we get to 250 likes on this video, which if I could get a like count, that would be great. I will give you the secret passcode that allows you to get that unlocks your ability to enter the contest like 15 times, thereby increasing your odds tremendously of winning up to $100 in free clothing. Awesome shirts, t-shirts, mugs. All right, guys. Keychains, stickers. Who doesn't like free stuff? All right, let's shoot for 200. Yeah, I know. Something happened with the handoff today. We don't have a lot of people in the live stream here. But you know what? You can go back to the recording and make sure that gets liked. So everyone that's watching this on the recording on YouTube, if we get to 250 likes tomorrow, I will give, if this video gets to 250 likes tomorrow, I will give the secret passcode so that you can unlock up to 15 entries in the contest to win like $100 worth of stuff, or second place, third place, I think is like $25, which is, I mean, that's enough for a cool shirt, hat, a few mugs, whatever. So who doesn't want that? Yeah, clothe me for free. I love working at Benzinga because all my clothes are just Benzinga stuff for free. All right, we got time for maybe one or possibly two more tickers. Yeah, Joe, what I mean, it's weird. Did you know that only 40% of the people watching are actually subscribed to our channel? I think that's very cringy. Very weird. So do yourself a favor. Don't be cringe. Hit the subscribe button, hit the little bell, and like this video. Excuse me. Elbow cough. The handoff sent me to some kid teaching options, not Benzinga related. Are you sure that wasn't Luke Jacoby? Just kidding. He doesn't know how to trade options. Okay. So he just sells them. All right. So what do we got next, ladies and gentlemen? Let's pull up the screen. Oh, I got to share mine. Maybe. Tunage for the millennials. Okay, so we got XME. Yeah, wow. Producer AB on the ball today, baby. Jason coming in with some special requests, but I got it, Jason. I got to listen to the audience here. All right, man. The audience takes precedence always. So we hit XME for Joe. Thank you. Let's look at Disney. DIS for Michael. Michael, the avatar is sweet. It's Africa with a sunset gradient and a giraffe silhouette. That is absolutely soothing and beautiful. So Disney holding support and breaking out of a downward trend after this big sell-off, which I think is pretty much around when tech started doing its thing. So what I'm going to do with Disney, we're on a daily chart for Disney. Just looking at price and volume here. We're no fancy anything else. I'm going to draw a line from the absolute high to this swing high down. And we can see our breakout. We got a nice little hammer candle today broken out. So what we want to see is a solid green candle at the close. 345 when your Amazon Echo goes off, reminding you, or your Google or whatever you got, reminding you to check your stocks at the end of the day if you're a swing trader. We want to see this green candle healthily, heartily close above the sloping line of resistance on Disney to start looking at this as a new upward trend. Bang. Right? So we get rid of this pink line and we can just start using the support line. Now, let's do a little Robert Roy on this, okay? Let's get the Fibonacci extension out. Retracement, I mean. Absolute high down to the low in our pattern. You can see exactly where we're hitting resistance. We got beat back down here on this red candle at the open. Open just about on what is the 50% line. Came back, consolidated, and turned everything around. I got to adjust the way that my settings are to be like more like Rob's. He's like my big brother. I want to be more like him now. 23% and coming back up toward that, what is this line? whatever, this green line here on our Fibonacci extension tool. So I do believe, my friends, that we are in reversal territory, which is like this. We're in reversal territory. We just want to maintain. And then we're going to watch for a break. I think a really healthy break above these lines, 189.5, and a healthy break 192. Those are your levels to watch. Closes above those are entries. And everything in between, guys. But I do think Disney's about to have a nice little run here. In fact, let's go ahead and get our standard deviation, or not standard deviation, rather, but our linear regression, another big statistics term. Broadly speaking, we are still in this channel trading upward. So just looking at this little thing, if we box it in, let's box it in, guys. Let's get our nice little, what do you call it? Rectangle tool. Meat of the trade. Meat of the trade. It might be just a little bit lower right there. There we go. There we go. And we're going to draw our line up to our neckline. And then we're going to add it to the neckline. And then it looks like, so we're trading here. This could be a breakout tomorrow. Could be a breakout the day after. Lining up pretty nicely with the median. Hit the like if you like how all of this stuff fits together. It's so cool. Charts. Neil. Gregory. All right, guys. That is all that we have time for today. Let me do a little thing here. There it is, guys. This has been Get Technical. I'm Neil Hamilton. With us today was options trader, Fibonacci expert, Robert Roy. Check that guy out. I know I will. We want to have him on the show again. Smash that like if you want to get him on the show again. Smash that like if you want your boy wearing a rat suit, embarrassing himself around his colleagues for your entertainment, playing Wonderwall on guitar. Sorry we didn't get time to look at the cryptos today, but come on, let's face it. Everyone's going to talk about crypto, so we got to talk about something else. Big thanks to producer AB. At least he hit the, what do you call it? The bell thing. We got 2 extras, but that's okay. At least we got it. So thanks everyone for tuning in. Hit that like button. Subscribe, all that good stuff. You know the drill. And next up, we have our Benzinga Pro Showcase with the 2 tallest men in Benzinga, the Bash Brothers, Brian Faluna and Jonathan Mallard. Thanks all. I'm Neil. This has been Get Technical. Happy trading.